Hello again. In this video we're going to cover the joint assets and the 50k cash together, but I'll make a little note in the cash element as well. But mainly here the joint assets. So this is everything that's owned jointly. Now normally, as I've said in previous videos, we would have split the main residence down usually in two under tenants in common, but the other assets, and ideally we'd own 50k in cash in a joint account. That means, of course, if whoever the first person is to die first, the other spouse automatically owns that 50,000 because it's in a joint account. Now it's 25,000 of that is still liable for probate, but on first death it's gifts between husband and wife. There's no issues at all for tax purposes. It's on second death, but of course that joint asset on second death would then be the surviving spouses only, right? But while both spouses are alive, we would hold the ideally only 50k in cash in that arena. Now obviously sometimes people own other property, lots of other assets, and as I've said before, the main point is to generally give those assets away during lifetime and have that completed by the time the youngest person is 75 years old. Because if we've made the last gift when the youngest is 75 years old, presuming reasonable health for a 75-year-old, there's a pretty good chance and a high probability that that younger person is going to live the 7 years that it would take for that asset to drop outside of the estate. And therefore that's sensible planning to keep the asset as long as possible just in case, but gift it away. The main point being, as we've discussed in the overview up here, is trying to make sure that the asset base is kept as low as possible, because for the vast majority of our clients the value of the home in and of itself is likely to hit $1 million and above. So joint assets eventually would be 50k cash, and we're looking to gift away the majority of those during lifetime. But of course you have to watch the capital gains tax, because as you gift each asset away, capital gains tax arises. So sometimes you have to do it over a number of years to avoid that capital gains tax, because sometimes we have to live with it. Sometimes a client with big asset bases has to pay some capital gains tax, but the highest rate there is on property at 28%. So again, not as bad as paying 40% inheritance tax. So that would be discussed with each client individually, but the main point here is try and get the joint assets down to zero except for the 50k cash, while still maintaining access to capital, which is driven by these flexible reversionary trusts, which we'll go into in those topics, so don't worry. Yeah, so joint assets, get that down to zero except for 50k in cash and cars and whatever else, furniture in the house. Okay, so that's joint assets.